Good evening, everyone. Welcome to the channel. Today I am going to talk about China Longyuan interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. China Longyuan Power Group Corporation Limited offers a diverse range of businesses and services. These include generation and sale of wind power generation and sale of coal power generation and sale of photovoltaic (PV) power design, development, construction, management, and operation of wind, coal, and PV power plants, operation of other power projects such as tidal, biomass, and geothermal energy, coal trading, business, manufacture and sale of power equipment, consulting services for renewable power generation plants, maintenance services for wind and other renewable power generation plants, training services for wind and other renewable power generation plants, generation of electric power for external power grid companies. The significant increase in China Longyuan stock price over the past year can be attributed to several key factors. Firstly, the company's expansion into renewable energy has been a major contributor to its growth, with installed capacity exceeding 40 gigawatts by the end of 2024. This is largely due to the government's ambitious targets for renewable energy and China Longyuan Power's ability to capitalize on these opportunities. Additionally, the parent company, China Energy Investment Corp. Limited, has been injecting assets into China Longyuan Power, further solidifying its position as a pure renewable energy operator. The company has also made significant technological breakthroughs, including the development of floating wind fishery, integrated technology, and offshore wind testing platforms. Furthermore, national subsidy payments have played a crucial role in the company's growth, with CNY 3.5 billion received in the first 9 months of 2024. Positive analyst ratings and market sentiment have also contributed to the stock price increase, driven by expectations of long-term growth prospects and ongoing projects like offshore wind and large-scale bases. Lastly, China Longyuan Power's focus on environmental responsibility has enhanced its ESG presence and access to funding, with a commitment to increasing installed capacity to 30,000 MW by 2025. The divestment of coal power assets in 2024 further positions the company as a pure renewable platform, contributing to its overall growth and stock price increase. The primary drivers of revenue growth in the company are primarily driven by an increase in electricity sales, marketization reform of new energy grid tariffs, and mechanism tariff alignment with benchmark coal power price. Additionally, the company's renewable energy segment has seen significant growth, with installed capacity of photovoltaic power increasing by 54.79% and total revenue growing by 14.03%. The company's green transformation in high energy consuming industries and accelerated green electricity consumption have also contributed to revenue growth. On the other hand, the primary drivers of revenue decline are a decrease in revenue from wind power segment, increase in operating expenses such as depreciation and amortization, capacity inadequacies in main transformers and transmission lines, and delays in grid construction and cross-provincial transmission corridor construction. Net income experienced a slight increase of 2.6% from RMB 624 million to RMB 640 million. However, this growth was not consistent across all periods, with net income also increasing by $1.52 billion in another instance. Despite the fluctuations, overall net income trended upwards. Profit margins, on the other hand, showed a decline. The operating profit margin decreased from 47.4% to 43.6%, while the effective tax rate increased from 16.8% to 18.9%. This suggests that despite higher revenues, the company's profitability and efficiency may have been compromised due to increased expenses or taxes. The company is indeed generating positive operating cash flow. This is evident from the financial summary, which states that the company is producing a net cash inflow from operating activities of RMB 6,673 million. Furthermore, the detailed breakdown on page 120 confirms this, with an operating cash inflow of RMB 49,227,642 and an outflow of only RMB 1,155,823. This significant positive difference indicates that the company is generating a substantial amount of cash from its operations, solidifying its financial health. The company's debt level has experienced a notable increase over the past year. According to various financial summaries, total debt rose by RMB 9,329 million to RMB 181,060 million, while long-term interest-bearing borrowings increased by 11.6% from RMB 87 million, 791,485 to RMB 97 million, 636,106. However, there is a discrepancy in the data, with one summary stating that the debt level has changed significantly, increase, and another indicating no significant change between 2024 and 2025. Regarding interest expenses, the company has reported mixed results. While some summaries indicate a decrease in interest expense, such as a 8.3% drop to RMB 200,664, others show an increase in net finance expenses by RMB 63,677. The overall trend is unclear, with one summary stating that there was no significant change in debt level or interest expenses between 2024 and 2025. In conclusion, the company's debt level has increased significantly, but the impact on interest expenses is less clear-cut, with both decreases and increases reported across different summaries. The company's financial performance reveals a mixed picture across its various segments. The wind power and PV power segments stood out as the top performers, with significant reportable segment profits of RMB 6,213,037 and RMB 549,632 respectively. These segments also generated substantial revenue, with wind power generating RMB 14,024,384 and PV power generating RMB 1,027,533. On the other hand, the All Others segment struggled to make a profit, reporting only RMB 142,648 in reportable segment profits. The coal power segment was also a major underperformer, recording an operating loss of RMB 1,588,349. These results indicate that the company's efforts should focus on improving performance in these segments to achieve overall growth and profitability. Management is expressing cautious optimism about the company's outlook, citing efforts to accelerate the low-carbon transition and optimize the financing structure. Key strategies include increasing non-fossil energy share, digital intelligence, and green finance policies. The company aims to maintain industry advantages, strengthen comprehensive risk management, and focus on innovation and high-quality development. Management is also prioritizing cost reduction initiatives to mitigate market volatility. The company has a history of paying dividends to its shareholders. In 2025, an interim dividend was proposed and later declared at a rate of RMB 0.1 per share, totaling RMB 835,982. Additionally, the company paid a final dividend for the financial year ended December 31, 2024, amounting to RMB 1,904,366. That concludes the financial summary for China Longyuan. Feel free to comment below, and I will be happy to answer them when possible.